Another way in which embezzlement happens is through something called purchasing fraud. This is when an employee diverts funds intended for company spending. Purchasing and cash disbursements are your largest vulnerabilities here. Theft of cash disbursements is easier to detect out of the two, since that's already listed in your account system. Purchasing fraud is best prevented via internal controls, such as those that can be developed by a CPA. Every purchase must be approved by you or another owner. You should always use purchase order forms to authorize purchases. Track these forms and make sure they are used for all expenses over a certain threshold. Don't just cross-reference assigned budgets with the total on the invoices. Make sure each budget report is comprised of purchase orders with corresponding invoices. Approved vendors. There should be a process for selecting approved vendors. Don't just let your employees buy from whoever they want. This is because an employee can easily create a fake vendor and just pocket the money. Creating a company on paper can be done for a few $100s, and for a few hundred more, a dishonest employee can even create a virtual office with a real secretary that picks up the phone when you call. An employee can also create a dishonest relationship with a vendor or have a pre-existing relationship through which they overcharge you and split the difference, or buy items from the vendor and keep them for themselves. Changing vendor info. By changing vendor information in the system, such as switching billing info, an employee can embezzle from the purchase cycle. They can add in their own payment info or the payment info of the aforementioned fake vendor or a vendor they have a dishonest relationship with. If this happens, the system will appear to be sending money to an approved vendor, but further examination will show vendor details are inaccurate. If a new vendor is selected for something, always ask yourself if this new vendor is even real. As with hiring policies, double check the new vendor's reputation on Google, Yelp, and the web at large. Make sure their address is real. Check it out on Google Maps. Look at their website. Give them a call. This will help ascertain if they are a real and quality business which will have benefits beyond just mitigating fraud risk. Also, ask yourself if different vendors have the same address in the system. This could mean an employee is embezzling. An employee may often hide their embezzlement across multiple vendor accounts, but fail to create a unique address for each one. Review all vendor invoices. The owner or designated employee, who should never be the same person who is in charge of selecting or purchasing, should approve the invoices. Make sure each invoice is entered into the accounts payable system. Also, look at the invoice itself. Does it seem like the invoice of a reputable business? Or is it possible it was generated by the employee via QuickBooks or some other software? Lastly, establish thresholds. Large purchases should require higher levels of authorization. Choose a dollar amount to limit your risk. Next, we'll discuss fraud using company checks.